Hey, welcome everybody to episode 40. 40 was a great age. Episode 40, Beyond the Books, how to get the most out of your bookkeeping relationship. Yes! Oh, this is good. This is right up my alley, obviously, considering what I've been doing for a living ever since I got out of working inside of the restaurant industry, and now I'm industry adjacent, as apparently they say. I have a lot to say on this topic. So buckle up. There is a lot to go over. Some of you may know. I bet quite a bit you might not know. So here's what we're going to go over. We're going to go over the difference between what a bookkeeper does and what an accountant does and what your CPA does. Possibly three different things. Usually they are three different things. Some can be combined, some cannot be combined. So we're going to go over that. Red flags. Okay. When to hire, when to outsource. Sometimes you need a bookkeeper on staff in your restaurant, or it just makes sense economically and organizationally to have a bookkeeper. Sometimes it makes sense to outsource. The monthly meeting, that's pretty standard, that you should or are already having a monthly meeting with your bookkeeper or accountant and or both, at minimum quarterly, but I would hope it's monthly. Or maybe it's even weekly, depending on some restaurants. So we're going to go over that and what that agenda looks like, who to loop in, who should be part of those very important financial meetings. And then we're going to get into some takeaways. Okay. So my screen just went blank for some reason. Anyway, so let's get into why bookkeeping is incredibly important and also what it should be telling you, what you should expect. And I think this is a really good episode for me to be recording right now because as a matter of fact, I just got off a deep dive call. This is with a restaurant in the Caribbean, actually, so it'll be interesting to work with them. And I know there's such thing as island time. I've spent a lot of time, gratefully, in the Bahamas since I was 20 years old. Love the Bahamas. And we have, there's this thing called island time. Things just move a lot slower and in a most lovely, relaxed, peaceful pace, if you will. So I'm wondering if that is accounting for a little bit of what's going on with this gentleman's restaurant in the Caribbean, not in the Bahamas, in another island. But I don't want to say in case he's listening and doesn't want me to reveal everything. But it's just, it's an island restaurant. And he was just mentioning that he's behind in a lot of the different filings. Of course, there's the VAT tax and then corporate annual that everyone has. And then there's they do their own payroll taxes. I didn't realize that they don't have payroll companies like we have here in the U.S. and in Canada. They actually are I believe required, or that was his understanding, to do them themselves. He has a software that will give him the reports, but he himself or someone he hires has to actually go in and do the filings with the appropriate agencies. So not a software that does all the things. And therefore, that alone allows businesses to get way far behind because the business owner, let alone a restaurant owner, has time to do all that. But when we were talking, and he's months and months, he's actually years behind in his bookkeeping. He's got them piecemealed together somewhat, but he knows there are chunks missing over the last at least 2+ maybe 3 years. And he has people working on it, but it's slow to come to fruition. And I'd like to say that should never be the case. I started to say it to him, and I said, you know what, I don't do business on your island, so maybe it's just a different work cadence that I'm used to. But here with the U.S. restaurants that we work with, and even the ones that I talk to, the U.S. restaurants where they're working with a bookkeeping service, but they're like, oh yeah, like they're only closed through, 4 or 5, 6 months ago. But they're just behind, but they're getting to it. They're nice, etc. No, that's not okay. Okay, let's just start right there. Your bookkeeping, if you're paying for a service, should be up to date always. You cannot possibly run your business without understanding the financial model that is produced with your financials. That's what we do. That's what we do here at Spark anyway. And this is not an advertisement for Spark. I can't help but talk about it. So when we work with a client, assuming the client is going to work with us and not, ghost us, as does happen sometimes. If they're going to work with us, they're going to give us all the accesses that we need, that we require. We're going to put our heads down. And if they come to us and they haven't had their books done in the last year, 2, 3, 5 years, we're going to move them right up as a priority, because we know that they can't possibly be running their business strategically, appropriately, in the best way possible until they know exactly what their financial situation is, which is the backbone of their business. So we put our heads down, we clear off some schedules, we get together as a team, and we get it done. And then once we bring everyone to current, then we have a schedule where we maintain everybody either weekly, monthly, or quarterly. It depends on them, and what package they choose to work with us. But you better believe it. Like, there's never a time where we don't have them done, assuming we have the accesses, because it is that incredibly, incredibly important. So having your books done is not a luxury. The way I talk to some people, I call it a utility. It's just like if you don't have this, it's like not having gas or electricity. You need to know your financials. Okay, so that's my soapbox moment right there. It is that important. And honestly, it's not that difficult. I mean, it might be difficult for you if you're not a bookkeeper and accountant, then it'd probably be very difficult, which is why we have work. So I hope it's difficult for you if this is not what you do for a living. But it shouldn't be that expensive. What I mean by it shouldn't be difficult. It shouldn't be difficult for you to find someone that can work with you, that you don't despise. So someone that you like, that can do what they say they're going to do. And do it at a reasonable price that makes sense for you and your business. That's easy. That should be very, very easy. If it's not easy, then I'd love to have a conversation with you to figure out why it's not easy, because it should be. Okay, so let's get into the first step, the first part, what bookkeepers really do versus accountants. So, you ask a different person this question, you're probably going to get a different answer. So it really depends. Here's my answer. So bookkeepers can do the day-to-day data entry, financial management. So they can enter the bills, they can pay the bills, they can enter your invoices, you have them, they can receive the payments against those invoices, they can enter in your daily sales, they can enter in your payroll journal entry, let's say, or your payroll amounts, pay the vendors, enter those payments. So a lot of data entry, but then some back end, they're basically fulfilling the data entry points of AP, AR, and then reconciling the bank statements, doing all the tax prep groundwork, like putting the right numbers in the right boxes, tying everything out so it balances and matches. That's how you find any mistakes, often called reconciliations. And then having a nice, clean, clear set of books. That is bookkeeping, right? So that's bookkeeping right there, putting everything in the right place. And if that is done, which is, not always done, but if that is done and everything is in the right place, then the accountant, which could be the same person as a bookkeeper. We here at Spark are bookkeepers and accountants. There was a time where we had some staff that were just bookkeepers and some staff that were accountants, could do both. Now I only have leads here, and we all are bookkeepers and accountants. So the accountant part is being able to step in and read and analyze the financials. So not only can we do, and we do all of the work, all the bookkeeping work, all the data entry work, all the reconciliation work, but then we produce the financials and we review them, every single line, so that it makes sense, so that we know that it's accurate. We analyze them so we know exactly not only what they're saying, but what they mean for you, what they mean for the business. And what I mean by that, one example, if we're analyzing, for example, a quarter, first quarter, second quarter, and we notice that the profit is a very heavy profit margin and higher than your previous years, we know, okay, this is going to affect your taxes. And we're going to bring that to our client's attention. Listen, you knocked it out of the park. You made a huge profit. Last year, you made half this profit. This year, you doubled it. Good job. However, it also means there's going to be a greater tax implication. So do we want to bring your CPA in? Do we want to adjust the quarterly estimates that we're making? That's a conversation that we have with the client, because we know what these financials mean. We know how to analyze every single line item in them. And then if a step needs to be done, like whether it's amending a tax return, which is very, very rare. It's very rare do we that should happen, but it has, especially if we get a set of books that have been done so wrong, it's advantageous for them to be amended. So there's that we'd bring over to a CPA, but we would bring up to a CPA, hey, this company just signed a huge client, or they're doing gangbusters from last year. I think we're going to have a very different outcome. Can we go ahead and adjust these quarterly estimates for the owner so they're not hit with a huge tax bill because they're having such a great year? That's when we bring in the CPA, is for those questions, and then to do the year-end taxes. So I'd say, a CPA, a certified public accountant. You could also possibly use an EA, an enrolled agent. If you find a really good one, that could work too. I find with the upper level, once you're doing, over $1 million, $1.5 million, $2 million, you might want to have that second set of expertise using a CPA versus an EA, but not always necessary. It does kind of depend on the person, but they do have to get the same certifications, somewhat the same educational credits each one does. So they kind of have the same set of knowledge. CPAs just have more. The CPAs can sign certain documents. They can help you if you're ever audited. EAs can too, but it's just a different level. So you can choose which one makes sense for you, but we require all of our clients here anyway to have that CPA so that it's that final set of eyes on the books for the year to file the taxes. So bookkeepers, data entry, accountants, review, analyze, make recommendations, and then the CPA is the final like head on the top to say, yep, let's do that. Oh, here's the new law on this, etc. So that's what we all do. And I will just say this for the final part on this. Well, actually, no. Let me go on to the next section because I think it'll touch on it. So red flags for bookkeepers. Here's the best way to explain this. One, make sure you have this monthly meeting with your bookkeeper. Have them bring the current, once they're done, first get them to explain that they're done. Oh, yep, all the accounts are reconciled. Yep, they're reconciled. Great. Have them have a printed or on-screen balance sheet through the period they close, so through the prior month, and the P&L with percentage of income, which they should have for you anyway, and also prior year. And then you can go down and you can review every line item. And if any line item you're just unsure what it means, you ask your bookkeeper to explain that. And they should be able to. They should be able to explain every line item. It's as simple as that. So you have a printed out financial set, go through it. Anything you're just unsure of or you just like clarity around, ask them and make sure you get an answer that absolutely makes sense to you. This isn't rocket science. And I don't want to make it sound like our work is easy. It's not necessarily easy. It is pretty simple though. And so it's not rocket science, and everything has a place on a financial statement, and you should understand what that means, and your bookkeeper should be able to explain it to you. If they can't, it means they don't really have a full grasp of what's going on in your financials, and that would be a red flag. Also, if you have a bookkeeper that you have given the responsibility of doing AP, so they're to enter your bills and to pay your bills, and if vendors are calling you because there's a discrepancy, or if you open up a vendor statement and you're looking at weird payments like overpayments, underpayments, then you might have an issue there, and that should be brought up between the bookkeeper, you, and the vendor, just to clear that up. You don't want to necessarily get on the bad side of any vendor. There's no point in that. Also, when you're reviewing reports month to month, if your costs of goods, if your prime costs fluctuate in any major way, they should be able to explain why. And it could be something as simple as, maybe there's 5 payrolls in 1 month versus 4. That does happen, depending on how you post your payroll. And that should be easily explained, but your bookkeeper should know that and should have already pointed it out to you anyway. And then the other report is you can ask for a profit and loss detail report. And all that is a much longer report, but it's just all the transactions that went into making up the P&L that you're reviewing. And if you have that report and you just kind of scan down it, you'll be able to see any duplicate vendors, any duplicate entries, and things. You can catch a lot in that report. We use that report every month on every single client just to catch any errors that either that we made, and that's how we catch them before they go to the client, or that QuickBooks may have made if there was a rule set up or a glitch in QuickBooks, which happens quite often. We catch them on that report, or we catch them when we reconcile, because your statement won't reconcile if there's duplicate transactions that don't belong there. But those are just some red flags when it comes to working with a bookkeeper that you're not really sure of. Okay, step 3, excuse me. When to hire versus when to outsource. This was so different from for restaurant, per restaurant to restaurant. It's very, very different. Here's what I would say on that. The quickest way I can say it is, when we're talking to a restaurant that already has a bookkeeper that's low cost, that they like, that could do the work very similar to how we do it, like the basic data entry work, for less than we could do it for, we always recommend keep them, stay with them. We can actually just oversee them when we do our monthly reconciliations for you. We can help train them up a little bit to be a little bit better, maybe take over some more work to save the client money. So most restaurants that have an in-house bookkeeper, they come in usually once or twice a week. They grab all the invoices, they pay all the, they enter them into QuickBooks. Let's say they pay the bills. They may or may not run your payroll. Then hopefully they grab that payroll journal entry or the sync or however they do it. And they put that in QuickBooks. And if that's not costing you a ton of money, and if there's a lot of volume there, a lot of bills to be entered, a big payroll that has to be tallied out, things like that, then it might make sense to have an internal bookkeeper. And of course, like if you have other businesses, maybe you have a real estate business going through there, something like that, it would make sense to have an in-person bookkeeper, again, if they're not costing you more than your business can afford. Now, most outsourced bookkeeping companies, like myself, but there are other ones as well, that can do all that work. We have systems that just make it go faster. So while we might charge a higher, what would be considered an hourly rate, our systems allow us to do an entire week of bookkeeping work in half a day or a day. So, it balances out in the end. We have had clients that have had a part to full-time, maybe a 20, 25 hour a week bookkeeper coming in and really kind of doing the bare minimum, like paying the bills and entering some stuff. But after a while, when we took a look at it, we could have done the same exact work in 4 hours. That is actually fairly common, depending on, maybe the bookkeeper's answering the phone for you, but still, how much does it cost to have someone answer the phone? Or these days, you might want to outsource your phone service too, and that would be cheaper than paying somebody. If it would be cheaper than paying someone, that you would want to vet out yourself. So there are pros and cons to both. I will say a con to it is sometimes when we bring on a client that is used to having a bookkeeper that's in-house, that's there a few days a week, that they can, constantly toss questions at, get things done, versus coming to work with an outsourced firm where we're saying, hey, Monday is the day to dedicate to you. We're going to do everything for you on Monday, and you can, email or call us the rest of the week if you want, but we're going to address it on the following Monday because we're working with other clients. That's, could be a con for you if you I was gonna say if you mismanage funds, but that might be right. If cash flow is so tight that you wait for every single deposit to come in from the night before in order to pay any bill, then yeah, you might be someone who thinks you need a daily bookkeeper just to be able to do that. But if that's the issue, you got bigger fish to fry, because no business should be that close. And working with us, that's something that it's a loop we can get you out of. How to vet a good bookkeeping partner, easy enough. Ask for references to other restaurants they work with. That should be a very easy thing to get them, and call up. And even if they don't, if you don't ask for that, but they just mention other restaurants, you can just, call up the owner or the manager of the restaurant and just, be nosy. I mean, we're all on the same team. Well, as firms, as far as restaurateurs go, and ask them for their feedback on that bookkeeper. So it's just like you're hiring an employee, hiring a bookkeeping service, you should ask for references from them as well. And any warning signs your current system isn't working. If you're using an internal bookkeeper, you want to see if they're coming in, 10, 15, 20, 25 hours a week, you want to see what they're producing for that time. If you're using an outsourced bookkeeper, just make sure that you're holding the feet to the fire in terms of what they said they were going to do for you and when they said they were going to do it. And just make sure that that's getting done. The fourth part, the monthly meeting, the agenda. So I touched on this earlier, but you want to go over your P&L. So that's your profit and loss, also called your income statement. And it would be nice to look at it for the month that just closed with a percentage of income. I also like to look at year to date with percentage of income to see where you are for the year, and then also a prior year one. Those are kind of my favorites. You can kind of decide what works for you. And then, as I mentioned, the P&L detail, probably just for the prior month, because if you ask for more than that, it'll be like a 50-page report. It's too much. So just ask for the P&L detail for the prior month, just to check for those duplicates. Also, if you're a little bit savvy on Excel or on a computer, but certainly on Excel, you can have them send it to you in Excel, and then you can sort it and look for duplicates that way. You definitely want your balance sheet to review. Your balance sheet is the strength of your business, so you want to make sure that all of the cash accounts, those are your bank accounts, your savings accounts up at the top under assets, you want to make sure those balances are accurate, that they make sense, that there's no negatives showing up there. There should never be a negative unless you are truly overdrawn in that account. You want to make sure that's up there. If you have accounts receivable, meaning you're waiting for people to pay you, that should be shown on there. All of your other assets, your equipment, your goodwill, you want to make sure that's on there, and what's been depreciated so far. So that's all the top of the balance sheet, and you just want to have a nice glance at that. And then down at the bottom, the first current liability is going to be your credit cards, the ones that you use, the ones that you go to Restaurant Depot and buy stuff with, let's say. You want to make sure that those are on there and the balance looks accurate for that time. Another little quick note that I love to tell our restaurant clients is when you note your balance on your credit card, say you have an American Express or maybe you have a JetBlue MasterCard or something, whatever balance is showing on that balance sheet, you want to make sure that you have more than that balance at all times in your OPEX or your operating expense account. That's kind of a really good indicator of the health of a business. You always want to have more money in your operating account than you do on those credit card balances, because you should be paying them off every single month. You never want to carry a balance. Is that reality? I get it. Like, there are probably some times where things are tight and maybe you have to carry a balance. I certainly did in the past. I get it, but that's never the goal. The goal is, if you're going to use them, you need to be able to pay them off every single month, even if you pay them every week. Literally, it's a 3-minute task, but it could save you months and years of agony and interest if you every week you log in and you make that payment and just keep that balance down. And then lastly, you can ask for a cash flow report. I don't always recommend that unless you know exactly what you're looking at. It can be a little confusing. Your balance sheet and your P&L. If you're working with a bookkeeper, with an accountant that understands how to analyze those, they're going to give you that information that a cash flow statement or cash flow report would tell you. But if you're not very confident, or you just don't know enough and you want to know more, then ask for your cash flow statement and have them explain it to you. And that'll also tell you a lot about their knowledge as well. And then lastly, who to loop in. Now, it depends. There are a lot of businesses that operate as an open book type business or a partially open book business. You don't need to show them what you make. You don't necessarily need to show them the profit if you don't want to. You could just share with your GM or your front of the house or back of the house managers their food costs, their beverage costs, the overall prime costs. You can basically slice off the top of your P&L and just show them the prime costs up there. But I think it's always a good idea in some level to loop in your leadership, your management team, so they have so they can feel engaged, they can feel ownership, and really perform their duties even better. Again, when it's time to bring in a CPA, I tell our clients, you're really only going to need your CPA once a year. That's to file your federal and state taxes. If you need to talk to them more than that, it's because you're not going to out of the park. It's either one or two reasons. Either you're killing it, you're making huge profits, and you need a tax strategy to not pay so many taxes whenever possible on those profits. So that's one. The other reason is if you have any tax issues, if you're under an audit, anything ugly tax-based, you're going to want a CPA on your side for those. So either they're really, really good or they're really, really bad. Other than that, everything else, we or just a really good bookkeeper and accountant can handle for you. And the other thing is the lines of communication between you and your bookkeeper and your accountant and your CPA should always be open. You should not have to wait. I mean, here we have a communication mandate that we respond within 24 to 48 business hours, depending on the level that you're with us with. So if you're a quarterly client, we might take 2 days to get back to you if we have to. We try never to do that, but we allow ourselves 2 business days. Any other client that's a monthly or weekly client, we're going to respond within 24 business hours. That is a guarantee. That is what we do. If it's not your lead, somebody else will always get back to you because that's the way it should be. Money makes people nervous. People are very emotional for the most part about money, one way or the other, and you don't need to be waiting for someone to get back to you. It should be a constant open communication, and you get responded to accordingly. And that should be true for anyone that you use for your bookkeeping or accounting. Okay, so just your takeaways from this episode. I know I did a lot of talking. I'm out of breath. That was a lot to go over. Takeaway number 1, a bookkeeper is your behind-the-scenes partner in profitability. That's how you should look at them. They're not just a receipt organizer. They're not a bean counter. They're not someone who just plugs some numbers into some boxes. A bookkeeper is your behind-the-scenes partner in profitability. They can really, really, really help you. Second takeaway, monthly reviews are where insights, usually pretty surprising ones, happen. Don't skip monthly. Don't. Even if they're quick, it's important to have that check-in and know where you stand. And lastly, use these financial reports as decision-making tools. They're your roadmap. Okay, they're your map. They're not just paperwork. This is the story that your business is telling you what is actually happening. Believe it. If you have accurate financials, you're working with strong professionals, they're telling you the truth. These numbers are telling you the truth. They are your guide, not just your hunch, your gut. There's a place for that. It's just not in the financial world. So let's get straight on that. And that is a wrap. Woo. Oh yeah. 28 minutes in. I'm wrapping up episode 40, Beyond Your Books. I hope you enjoyed it. Please like, share, and do all the fun stuff with this episode. And I'll see you on the next one. Bye.